Thank you so much.
You're a
Sanjiv.
amazing human being and an amazing stock picker.
Always a total
Because I think,
pleasure and delight.
concept. Hi guys, welcome to our next episode of FINtastic Talks. And as always, let me thank you for taking out the time to attend today. I am really, glad that you guys have been taking out time, and the kind of love and affection that we have seen to these talks, with now more than 25, 30,000 live viewers for each talk, and amazing number of views. Thank you. And it makes us feel great that the time we are spending is well spent and we are able to add value to your life. So today we are in a very different scenario than we have been in. The Ukraine Russia war has put the world in a tiffy, and the whole concept of a World War III happening is very, very ripe. The markets have crashed to a certain level, and there's a lot of correction that has happened. A lot of investor wealth has got eroded all over the world, and petrol is at an all-time high, and it just will keeps on going high with the restrictions and the sanctions. So it's a very strange world where we had moved out of the Cold War, and today, due to, I don't understand the reason why world is being pushed back into a Cold War, and rather than diplomacy or dialogues, it has started with threats and sanctions, and what is happening in the world is really strange. But whatever goes down has to go up, and whatever goes up has to come down. So I'm sure this is going to give some amazing opportunities for you to get into the right stocks at the right price. And hopefully, there is a quote by Warren Buffett going around. I don't know whether it's correct or not, that if the market crashes due to the war, buy. So if the war solves itself and nothing happens, then you make a lot of money. And if the world ends, then then anyway you don't need the money. So I I know it's maybe true, it may not be true, but it's very relevant that look at the right opportunities, and this is the time where you need to be invested in value stocks, blue chip stocks, or very strong stocks. This is something I've been talking about for the last 2-3 months, that we have to be careful and we have to be in a very secure area, and it is important for us to be in this area. It is the time to avoid smaller, weaker companies, and that's my view. And if you build your portfolio right, there are still opportunities out there. So now, taking today's topic, we have an amazing gentleman, Rushabh Gandhi, with us today, and it's a great pleasure to have him here. And it's very relevant to have him here also, because we are looking at a world where earlier there used to be a saying कि इंश्योरेंस के वाले पीछे भागते हैं. ठीक है, आजकल उल्टा हो गया, इंश्योरेंस वाले के पीछे भागना चाहिए. Because I get so many calls कि यार मुझे इंश्योरेंस नहीं मिल रही, I am not even getting the right cover, I'm not getting the right price, I'm not able to buy insurance. So एकदम उल्टा हो गया. Today the world is running after insurance providers. So here I'm not talking about the investment products, but at least the term products, where it has become a huge challenge to even get insurance today. And agar aapne, even if you still haven't taken it, or you still haven't topped up your life cover, please do it today, because it is becoming more and more expensive. Even the last 2-3 years, we have seen the prices go up by almost 30 to 40%. And Rushabh is one of the foremost names when it comes to pure protection or life cover. I know he does a lot of other things, but he's played a very strong part in bringing very innovative products to the protection side, and we'll be deep diving onto that. Also, Rushabh is known as a master of execution. So, Rushabh, that is another area that we want to deep dive with you. That what are the tips for all of us, so that how do we get into execution? And guys, you have an option to put in the comments, and when you put in the comments, we can see them live. So if you have any questions or anything that is there in your mind, please put them into comments, and we would love to answer your question as you go. So would love to have a lot of comments and the thoughts and views from you and questions from you to make this talk more productive. So Rushabh, thank you for taking out time for being with us today.
Thank you so much, Sanjeev. It's an absolute pleasure. Thank you for having me.
So Rushabh, before we get into you as a person, please tell us, what do you feel about this world? Yeah, what is happening with the Russia-Ukraine war, and what is happening with the life insurance after COVID, where term rates are just keeping on going up and up. And today, there is a cap on the life cover. Most of the companies are not underwriting over a X amount of money. So, what is happening on the life insurance space, and what would you like to tell our viewers today?
So, very interesting question, Sanjeev, and thank you for asking it. Uh, I think you touched upon it beautifully. When you were kind of giving the intro, right? For the first time in my career, spanning over 25 years, and out of it, more than 20 years have been in insurance. I'm seeing insurance actually being a pull product vis-a-vis it always being a push product, right? There was a time wherein there were months together wherein people wouldn't come and ask you, "कौन सा insurance product अच्छा है, क्यों लेना चाहिए, why not," and so on and so forth. And today, I'm not exaggerating. Literally every other day, you would have somebody calling up and saying that, I need to buy insurance. What seems to be the right product, etc. My only message to whoever is listening to us at this point in time, right, is that yes, insurance is becoming expensive. It has become expensive over the last couple of years. You kind of you mentioned the numbers. The premium rates on term plans have gone up by about 30-35%. uh, and a lot of people ask me, is it the right time to buy, or kind of should we wait? And my standard answer to everybody is that the right time to buy insurance is now. Don't postpone it. The cost of postponement can be crippling. Nobody knows what's going to happen tomorrow. And it's elementary, right? The older you get, the insurance is going to become more expensive. So the cheapest time to buy insurance and the best time to buy insurance is literally right now. So that's how it is. As far as the war war is concerned, it's exasperating. It's almost frustrating. Sometimes we feel that something that seems so easy from a decision making standpoint, itna time kyun lag raha hai, right? But assuming it lasts a little bit longer, then the repercussions can be crippling. We're talking about petrol prices, completely skyrocketing. We've heard a lot of people saying that crude will cross the $200 mark. And the currently it's kind of impacting two countries, right? There is a fair chance that NATO might kind of step in. And if that does happen, literally anything can happen. So I would again urge people to make sure that they are insured, not just for life, but literally for each and every of their assets.
Yeah, so actually a crazy world we are living in. And people used to talk about, and I used to hear, India doesn't have free press. But looking at the coverage, I think India today is the only country to have a free press. Because if you look at coverage from the European and the
Absolutely.
US side, it's totally biased. And if you see the coverage from the Russian side, it's totally biased to the other side. Whereas I have to give credit to the Indian
Correct.
news media, which is actually trying to do something in the
Yeah.
neutral. And I hope it works out and it all solves out, because the human pain and suffering is actually crazy. So now coming to our topic, Rushabh, tell
Yeah.
us a little bit about yourself, about your children background, your education, you as a person. How did you get to sit on this chair? So what is, just let's hear your story.
So, I'm on the verge of touching 50. This is something which most people don't kind of acknowledge or say, but that's what it is, and that's the reality. Married, one son, one wife. So that makes things fairly easy. I actually, it's very interesting, Sanjeev, that I actually come from a yeah, I actually come from a business family, and uh, way back in the early 90s, when I was just about completing my education. Most people recommended that chalo graduation ho gaya abhi, let's kind of get into business and so on and so forth. And I said, no, let me learn that little bit extra, let me get that edge, which is when I actually kind of did my masters from NMIMS 93 95 batch. And then after that, again, most people said, chalo, abhi, you've done your masters, now why don't you get into business, right? And I said, now let me get experience for a couple of years and so on and so forth. And after that, literally one thing led to the other. So I obviously completed my management. I got a job with a fairly successful NBFC at that point in time. Moved to a bank, and then in the year 2000, insurance opened up, right? And you typically consult your senior colleagues at that point in time, right? And everybody used to say at that point in time, "Arey, ye next sunrise industry hai." So I said, "Chalo, theek hai, chance lete hain." And that's when I actually got into insurance pretty much when it opened up. I was one of the first people who actually moved from banking to insurance when it opened up, and I've been in insurance ever since. So yeah, so that's broadly what the background is, and I don't think I'm going to retire in any industry which is outside of life insurance.
No, no, that's amazing. So, which bank were you in, and which insurance company did you start, and how was your journey? Insurance at that time used to be really tough, and as you yourself said, it was a very hard selling business where the typical portrayal of an insurance agent or an insurance broker was a person with a bag chasing a person, and the whole perception of insurance was the uncle who comes to the house and pesters you to buy insurance. So
Correct.
how were your initial years? Which were the companies? How did it go?
So so the bank was a Canadian bank called Bank of Nova Scotia, which basically has its branch at Nariman Point in Mumbai, and it has a few more branches in India. In insurance, I started off with so I've actually have done the rounds, right? So I started off with Bajaj. I spent barely a year there because for a variety of reasons. I moved to Birla Sun Life, and that's where I actually learned, I think, most of the good stuff that I know of today, from the bank assurance space. We used to have Citi, we used to have Deutsche Bank, we used to have a few private sector banks, and so on and so forth. And that's when we, learned the nuances of, bank assurance and alternate channels, like it was called at that point in time, right? Because you had the tied agencies channel, everything else was alternate. So you learn the nuances of the alternate channels piece. I spent about 3.5, 4 years there, after which I actually joined Aviva. I spent a good 7.5 years there, again in the banker space. So I've been a into inverted commas and alternate channels guy all through, right? So tied agency, I've literally like learned whilst working. After I became first director sales and marketing at IndiaFirst Life. Then 7 years with Aviva, spent about 3 years with Canara, HSBC, and with now India First for the last 7 years. So it's been a it's been a fairly long journey. 22 years in life insurance, 5 companies, and very very interesting, very very interesting.
No, no, it's been actually been a fantastic journey for all of us. Even for me, when I started insurance, and people used to say, "Yeah, insurance, why? It's a hard sell." And my point always was that there are always right opportunities in the insurance, and they're always right products. They're good products, they're bad products. And if you are able to identify the right products, and I remember we used to sell this product from LIC called Jeevan Suraksha, which used to give a 12% guaranteed return. And then even
Correct.
after retirement, it promises you a 12% return on the corpus. And then there was Bima Nivesh, and there were so many other interesting products that
Jeevan
we have
Shri was
seen.
there. Yeah.
Yeah, Jeevan Shri and so many other
Correct.
interesting products. So they were
Correct.
always amazing products out there. They were, yes, there, but that's where the knowledge of your broker or the partner and the ethics come. For me, sometimes share stories from my father. So one of the stories from my father is that he always says, "Ki, look, there are two people traveling in a train. So train has an accident. So one person dies, one person lives. Why? They were both sitting together. It's just the blessings of the people that one person had more blessings. And then there's a third person who didn't catch the train that day, or who missed the train. He
Correct.
must have been cursing that, look, I missed my train, but he ends up being the luckiest.
But yes,
So we have to get the blessings, and we have to do the right thing. And I think one thing I've seen in this 15-20 year journey, that initial 6-7 years was very good, very clean. Then there was those 4-5-6 bad years where a lot of telecalling, mis-selling, and other. And right now again we are at a good time where the products are actually very good. So if you look at the non-par products, they are giving a 6.2% type of a return, or 6.4 tax free. They're better than any tax free bond out there. And same is with the term insurance. Today it's available till the age of 99. Virtually you're guaranteed, if you are amongst the lucky 1.5% who survive. But otherwise, and if you calculate the IRR also, you'll get a 9 to 12% IRR depending on your life expectancy. So life insurance products are today fantastic. So now coming to the crux, since we have been talking about the war so much, there is a question that
Hmm.
war is a typical exclusion in term insurance and other insurances. Whereas I know some companies like HDFC have products where they have exception and they include the war risk also. So Rushabh, what is your views on this? And is it, since you are more closer to it, is it an exception always, or is it an exception in certain types of products? And especially a lot of Indian army men are looking to supplement their life insurance. Then how do they go about buying insurance from companies like us, given the fact that for them the war risk is actually a very, very high risk?
Correct. So again, interesting question, Sanjeev, and so I remember, I'm not sure whether it was 5 years back, 7 years back, but definitely 5 to 7 years back, war used to be expressly excluded, right? And it used to be as one of the exclusions when it came to a life insurance policy. I remember, and most of my friends who must be listening to us at this point in time, they would have had these exclusions in the policy called, act of God, which used to be fairly, cryptic at that point in time, but effectively it meant that, any catastrophic incident which actually happened, like, be it an earthquake or something of that sort, you won't get your, insurance claim kicking in. But delighted to share with you and with everybody who's listening to us at this point in time, that today, most of the claims which would be an outcome of either a catastrophic activity and or war, will actually get entered in and will actually get paid. In fact, the only exclusion which is, almost like hard coded, right, is the 1 year suicide clause. Other than that, if there is death because of war or any other reason which is catastrophic, the insurance claim should and will get paid. So that's what everybody listening to us should be aware of.
But
uh,
Rushabh,
uh,
how does that work? If I have a policy I bought a 15 years or 18 years back, would these new terms be available to them also, or those contracts are as per those conditions that I had signed at that day? Because the policy bond will say that act
Correct.
of God is excluded, and the act of God, at least when we do claims management for our clients, and this is something we are really proud of, that our life insurance claim settlement is 100%, where we fight for each and every claim. We say that we'll be win-win for all. We will not get a wrong claim paid, but we will not also let a right claim not get unpaid. So point is that, does it get covered for them also, or how does that happen?
which is that today with an act of God, there is a chance of repudiation. I would genuinely urge them to go and buy a new product in the current scheme of things, because today nobody is excluding this. Absolutely nobody. जो पहले के
Hmm.
policies है संजीव, that it's like uh, you know at least at India First Life, okay, I can talk about our organization. We are inclined to pay all the claims, even if it was due to act of God, or because if it was due to some warlike conditions. But I cannot really
Hmm.
comment on what the others are doing. From a consumer point of view, I would just request each consumer to check his policy bond once. If it is there as an exclusion, they should pick up one more policy without doubt, because in all the recent policies which most insurance companies have, this exclusion no longer exists.
Yeah. So, guys, it is very, very important. And I know we had some internet issue and you lost some of our conversation in between, but I'll repeat it. Okay, look, earlier the policies that were sold, and this is very, very important. And we love LIC. I love LIC, but some of the LIC policies that the people have bought thinking it's a bigger company, safer company, but then they had an exclusion of what is called an act of God. So act of God means that look, there is an earthquake or there is a flood, then some that also gets excluded, or war risk. Whereas the current policies by even from LIC or other insurers will cover it, but not all. So one, it is very, very important to choose a good broker. And then broker may, even if you are choosing Bajaj Capital, I'll still say, please give your requirements in writing. Okay, look, I want a cover which covers XYZ. Get an answer in writing and let them give you a product where you're getting what you want. And it is very important for you to review your insurance, like I say with health insurance. Now health insurance, a person who had bought 10 years ago gets a much more limited coverage than a person who's buying it in maybe this year or last year, because last year there was a new regulations which almost covered 67 treatments which people had not even known about 15, 20 years back. So it is always important for you to refresh your life insurance and health insurance. And today, since we are on life insurance, it is important for you to refresh your life insurance. uh, at Bajaj Capital, we are planning to come out with a life insurance review, because we are coming across a lot of cases where this problem is there. And at the time of claim, then we can't do anything about it, because that was the condition that the person bought it. So, but if you have, if you are lucky enough, and most of us are lucky enough that we have not reached that situation, it is time to relook at your life insurance. And if you are watching this talk, I think this is the biggest takeaway you can have. Please pick up your policies and see, does it cover war, an act of God? And if it doesn't cover that, it's time for you to take a newer policy, and it is time for you to act on it. And this is not a very detailed process, and it doesn't take too much time. And believe me, that if you are paying 100 rupee premium and getting 1 lakh cover, I'm taking an example. Today, for that 100 rupees, you'll get a 5 lakh cover. So despite buying a newer policy, you'll get a much better coverage today, because the rates have over the last 15, 20 years fallen. And sometimes I see people with crazy amount of premium they are paying, which they can save by just moving into a newer product or a different policy. So now, Rushabh, taking a very tough question now on
Sanjeev,
you.
just before you ask me the next question, right? I think let me just supplement what you said, right? So what you said is absolutely correct. I'll give the viewers a perspective, right? So let's assume you've taken your policy from, let's say, a big distributor, let's say like Bajaj Capital, for example. Okay, and then there was something which inadvertently got missed out, and as a consumer, you were not aware of it. The chances of the insurance company making an exception if the distributor was as large as Bajaj Capital is substantially higher, right? If Sanjeev will give me a call, I will definitely listen to him. I will definitely say, he will say, "Nahi, important customer hai, you need to do it for us," and we will definitely make that exception. So uh, yes, I mean, Sanjeev was little bit shy about talking about it, but I'll tell you all very, very confidently that the the reputation of the distributor and the size of the distributor does matter. It's very, very important, because in moments of need, they will be able to fight your battle, substantially better than what you will be able to do individually. Yeah, Sanjeev, sorry, I kind of stopped you
No,
there.
no, thank you, Rishabh. That was a great vote of confidence. And sometimes these things happen. See, point is that a lot of people don't know. Like we had a case, this lady had bought a policy 9 years back,
Hmm.
and she died couple of years back due to dengue, and
Hmm.
which wasn't thing she could have been carried for 9 years. And I was going through with my claims team, and I saw that this was a case repudiated or rejected for the reason because the surveyor found that she had gone in for a surgery which she did not report when she took the policy, and the surgery was a C-section. Now most of the
Hmm.
women don't treat childbirth as a surgery. So when they
Correct.
asked her, "Did you have a surgery?" She said no. But and they rejected the claim. But again, the same thing. I actually called up the CEO of the company and I said, "Yeah, this is not fair." Point
Correct.
is that maybe we could have got it done in some other ways, but at least I felt happy that the lady had bought the policy for her children, and at least
Hmm.
they were able to get the claim. And I told my team that you have to go and personally deliver the checks, make sure that it gets managed properly, and that this thing. So now
Correct.
coming to the tougher question, Rishabh, this is
Yeah.
we have some amazing audience, and there's this gentleman called Madhusudan who always asks very tough and straight questions. So he's asking. He says, I don't know whether this is correct or not, but he's saying today India First is ranked 23rd out of the 24 insurers in the country. So how do I trust it, and how do I know that the product I buy will be safe for me?
No, so factually incorrect. So India First is today amongst the top 10 ranked companies in the country today. We were the
Yeah,
23rd
I
ranked
wanted
company
you to
in
say that. I
2000
knew
and
that, but
correct. So thank you, Madhusudan, for actually giving me an opportunity to talk about a growth story, because otherwise I would not have had that opportunity. But we were the 23rd entrant, okay, in the life insurance space. So we were the 23rd company which entered the life insurance space way back in 2009. Okay, but the growth trajectory has been absolutely fantastic. In fact, in this financial year, we are at 57% the fastest growing life insurance company in the country. uh, we have a CAGR of a number which is depending on whether you take a 3 year, 5 year, 7 year CAGR. It's a number of over 35%, which puts us even at a 3, 5, or 7 year, 7 year spectrum amongst the fastest growing life insurance companies in the country. Uh, and from a trust point of view, I mean, there'll be very few companies that you can trust more, because we are owned by two of the largest public sector banks in the country today. So we are owned by Bank of Baroda and Union Bank of India. Together, these two banks own 74% of India First Life. The They have board seats and everything else that go along with it. So nothing to worry about, Madhu. I would urge you to look at our products, look at our processes, and the rest you can leave to us. And I'm sure that we will do justice.
yeah, I think very well answered, Rushabh. Very well answered. See, today India First is one of the better performing life insurance companies, and that's why we call Rushabh is known in the industry as a master of execution. That despite entering 23rd out of the 24th insurers, they have been able to reach a top 10, and they are backed by some of India's most powerful public sector banks. And also the fact that insurance is a very highly regulated industry where there are very strict norms. So even if there is a weaker insurer, the chances of it going away are very limited. Till now no insurer has failed. It gets, sometimes some companies get taken over by others. So so even so, point is that yes, you have to look at the quality of the company, but you have to look at the quality of the companies in terms of their customer service and their claims handling, because you don't want to be fighting for the claim. So now next question again, Madhu is going to be your favorite guy. So he's asking. He says, okay, now tell me about what is your flagship product. So he's saying, let's get into what is the product I can buy, and do you have any crazy high return, high paying guaranteed products, fixed assured plans that we can look at?
So Madhu, our one of the things that we are very very proud about is that we create value for all our stakeholders. Okay, so our stakeholders obviously are our shareholders, our customers, and our distributors, right? So you won't have any one of these entities, saying that अरे मेरे को बहुत ज्यादा कुछ अच्छा मिल गया at the cost of the other two, right? So Sanjeev will want a certain amount of money to distribute the products, which will be reasonable. His customers will want a certain amount of returns from our products, which also will be reasonable, and those products will make a fair amount of value for our shareholders, which also will be reasonable. So all our products, and I'm happy for somebody to take you through them. Will be so something which we talk about very very often internally is honest products at honest prices, right? So if you're talking about a non-par products, the guarantees depending on the age of the individual as well as the the term of the guarantee, will range from maybe a 5.5 to a 6 tops, that kind of thing. I don't think we will give anything more than that. Some organizations might be giving more. Good luck to them, honestly. Like I said, we want to create value for all our shareholders, because all of our stakeholders, excuse me, because that's the only sustainable model in the long run. If I go excessively aggressive and do everything for the customers, Sanjeev will stop selling for me, right? Or if Sanjeev continues selling for me, then my shareholders will say, "तुम लोग क्या कर रहे हो? You are not making us any money." So basically, it has to be a evenly matched pie, and which is what we strive to do at India First Life, and honestly do it quite well.
Yeah,
On the
very well
specific
answered.
product,
So what's your Rushabh, what's your flagship product?
yes,
So I
exactly.
know
So
one of your flagship products is your term insurance, and there's another question that Anand is asking,
hmm,
that he's asking is that how come your term insurance premiums are kept lower than other top players? So how do you end up managing that? Today you are offering one of the best life insurance rates in the industry when it comes to protection. How are you able to achieve that compared to even the top 1 2 3 players?
yeah, so if you, Anand, again, very very good question, and thank you for observing whatever you observed, because you're absolutely right. Our term insurance premiums are amongst the lowest in the country today. I do get nudged, every now and then, by the the actuaries that we need to increase the rates. So if at all anybody is intending to buy an India First Life term insurance product, the right time is now, because the rates might just go up. As far as how the rates are relatively low, right? So see, you need to be aware of two things. Okay, one is where does most of our business come in from, okay, and how much information we know of the customer when we are actually kind of sourcing policies. And the second thing is, what checks and balances are we putting into our process, so before we actually issue the policy, we are adequately sure that the individual is worth insuring. And once we've got these two boxes ticked off, it's relatively easier to give a slightly more competitive term insurance rate. So today, around 85% of our business, okay, comes from customers of Bank of Baroda and Union Bank of India. Okay, given that 85% of our business comes from these two banks, we literally know anything and everything about these customers. They have been banking with the bank for decades, literally. So there is very little chance of anti-selection. And as a result, we have been able to kind of keep the rates at the levels at which they are. The second thing is we've invested a whole lot in technology. So today we have in-house fraud prediction models. We have in-house risk assessment, a RAF, which is a risk assessment framework. So we've actually made sure that when we are actually onboarding a customer, what are the checks and balances that we need to be sure of, to ensure that the customer is a good life to insure. So I think because of these two things, we've been able to kind of keep the term insurance rates at a number which is relatively low. And I would want to, for the benefit of the larger group, be fairly vocal and frank about it, that these numbers change literally daily. So today we might be the cheapest. I know for a fact that we weren't the cheapest till about a couple of months back. We were close, we were in the top three, but we were not the cheapest. Somebody else has kind of increased their rates suddenly you become the cheapest. We might increase the rates, in a few days or a few weeks. Suddenly we won't be the cheapest anymore. So there will always be that push and pull, but it's not important that you know who's the cheapest. You need to worry about, see, why are you buying insurance? Okay, why are you buying insurance? You want to make sure that at the moment of truth, your claim needs to be paid, and you need to kind of have a process which is seamless, and you need to make sure that the parentage of the insurance company that you're buying the product from is top notch, and we tick all those boxes too. So I think you look at it holistically, and yeah, I think you pretty much got your answer. And yeah, just maybe, okay, one more point which is interesting, right? Maybe the people at India First might have been better negotiators, right? And we might have negotiated a way better deal with the reinsurers, than some of our competitors. So at the end of the day, वो saying है ना, आम खाने से मतलब है what गुटले गिनने से. So you're getting a good
Totally,
product from a top-notch company. Yeah.
so that's exactly what I wanted to say. Net, India First is a good company. Their products are very good, especially in term insurance. Their rates are very good. So just go and if it makes sense for you and it meets your need, then just go ahead and buy it. So rather than trying to figure out why they are able to get a rate which others are not able to get in the market. So also there's a very interesting question that has come up, Rushabh. There's this gentleman. He's saying that my job work or my professional is that I'm a professional trader, and I'm my income is 50 to 60 lakh rupees per year. So I am very good at what I do. But when I go to buy insurance, I am told I don't have any earned income. So he's saying, what is it now with my income? Okay, he wants to take a 20 times or he wants to take a 10 crore cover, but he says, I'm not offered that cover because people say I don't have earned income. So point is, what would you like to say to this guy, that how does he go about getting life insurance protection for his family if he's a professional investor and he says investing is my business?
No, so if investing is his business, and he is filing 50 lakhs and 60 lakhs of IT returns consistently over a longer period of time, you know I don't anticipate him not getting the life cover, for the simple reason that that's what fund managers do, right? I mean, it's basically it's basically a way of life. It's basically a chosen profession. And I'm happy for him to kind of apply for an India First Life policy, and leave the rest to us, right? Because uh, it is a profession, it is a valid profession. His 50-60 lakhs per year is filed income, and you need a certain level of expertise to manage funds, and if he demonstrates that expertise, there's no reason why his uh, perceived value of his life should be anything lower than what he is actually anticipating it to be.
Yeah. So I think again very well answered. And please do apply through Bajaj Capital. Huh? We may help you there. And but let me just say that even my few of my own friends who are into a similar situation have faced this problem. So Rushabh, it's very good that you're open to looking at it, but this is genuinely a problem out there, where sometimes without taking it to the right level or on the underwriting, maybe it's not reaching the ears of the right people, and that is why it is getting rejected. So this is actually a problem that a lot of people, especially
Yeah.
from the stock market and other industry, face. And especially today, day trading is a professional in India. I personally know so many people whose just livelihood depends on trading or long term investing also, or they are professional investors as they call it. And we have seen some
Hmm.
people do so well. So so it should be taken as a as a this thing from it should be taken as a business. And please do apply. And if you apply through Bajaj Capital, then probably we can chase up and follow up on your behalf and make sure that if there is any exception that is required, we can get it done for you. And also another question, which is also quite interesting, and I'm sure it comes to a lot of people's mind. They are saying that, look, when I buy a cover up to 2 crores, I can get it issued quickly. So, will there be a problem if I buy two crore covers from three companies rather than 6 crore cover from one company?
So, so today information is available, right?
So, Rushabh,
So,
we have very
one thing which
interesting
is
audience. Huh? They are all, they are all,
no, no, sir.
they are
It's
asking
it's
some very
it's
interesting
it's
questions.
interesting. Yeah, it's an interesting audience. It's interesting questions, and it's a learned audience actually, which is what makes it even better. It's a learned audience, right? So, so let me try to break up that response in two parts. So the first thing is that if you are applying in three different insurance companies, you will have to disclose it. Okay, and as long as you disclose it, okay, the chances and everything else is fine. The chances of the issuance kicking in a little bit faster is higher. I'll tell you why. So most organizations, when they actually deal with reinsurance companies, okay, they will have certain limits for the organization itself. Okay, which means that today if I have a tie-up with, let's say, XYZ reinsurance company, they will tell me that, Rushabh, your team is good enough to take decisions worth of sum assured up to, let's say, 2 crores. If it's more than 2 crores, you please refer it to me, refer it to the reinsurer. Now, the minute it goes to the reinsurer, the chances of the issuance taking a little bit longer increases. Vis-a-vis, if it was 2 crores. Now, this 2 crore is just an example. Some companies might have 1.5 crores, some companies might have 2.5 crores, and so on and so forth. It varies from company to company. But
And it
yes,
also
I mean,
depends on distributor to distributor.
it also, yeah, absolutely, again, the advantage of a big distributor, right? It depends from distributor to distributor. So you might save maybe 4 or 5 days, but I'm saying when you are getting into a contract which is a lifetime contract, does 4 or 5 days really matter? Also, you have to be aware of the fact that a lot of organizations have something called a high sum assured rebate. Okay, so the higher you go on the sum assured side, and assuming you're a good life, insurable life, you might get a little bit of a benefit, on the premium. So 6 crores from one organization might just be marginally cheaper than 2 crores from three different organizations. And like I said, 4 or 5 days of additional time in my mind is absolutely irrelevant when you're contracting with somebody for life.
Yeah, but Rushabh, at the time of application, I don't think you can tell that I've applied to three places. It's only when you have cover, because the application form only covers that. Please reveal where else have you taken the cover from. It generally, I don't think it asks you where have you applied. So even that, because you may have applied, but how do you reveal that? Because that may itself be a challenge.
But again, I would urge everybody listening to us to actually declare that. See, I'll tell you. See, at the end of the day, it is human life value, right? If somebody's human life value is 2 crores and it is applied at the same time to five different companies for 2 crores each, and all of them actually give the cover, then there is an anti-selection of sorts. So it could result in a problem going forward. Maybe there is no direct, I think, question on this, and the questions are more around. But I think there should be. Okay, so you got me on the wrong foot. I'll have to check the application form. But there should be a question which says that what is the insurance you currently have, or what is the insurance that you've applied for. But I'm not really. I'll have to check this one out, Sanji. But again, see, insurance is a contract of good faith, right? You have to, जो भी सच है वो बता दो. Other the last thing you want is the purpose for which it was taken does not get achieved, right? Because somebody, when you're even not even there, your nominees or somebody have to fight a battle, which is going to be very, very difficult for them to fight. And I can assure you, and I'm not even talking about India First Life, I'm talking about the life insurance industry, that if you disclose the truth, no company will repudiate the claim. Okay, no company. Okay, there is no reason to. There's absolutely no reason to. So, you know, you know, break the rules, bend the rules. क्यों करने का? Why? I mean, the purpose is what? You remember the purpose? Purpose is यार मेरे को कुछ हो जाएगा, तो my family should
तो
be protected.
प्रोटेक्शन मिलना चाहिए. Yeah,
बिल्कुल
that's
मिलना
true.
चाहिए, तो ये सब क्यों करने का? If I'm eligible, I will get. If I'm not eligible, I will not get. That kind of thing. Shortcuts
Okay.
don't lead us to the destination eventually.
Yeah, yeah, I understand, but I think the person's intention was to get it quickly rather than taking any shortcut. So
वो
next
possible
question
है.
is also very interesting question. There's a gentleman Pradeep Singh Negi, and he's asking this question that look, should I buy a term insurance first or should I go for a guaranteed policy? What should I take first? So I have a very different view on this, but I will let you answer this, Rushabh, first. That the question is on the screen. That what should be his priority? Which policy should he take?
So my first response and my knee-jerk response to that would be, it depends on what you already have. Okay, now let's assume for a moment that you have neither. Okay, and this is the first term stroke a non-par guaranteed policy that you are intending to buy. In my mind, okay, in my mind, you should always go for term first. For the simple reason that it's cheaper. It is typically most people's first policy, and it works like an income replacement tool. आज समझ लो मैं नहीं हूं या कोई भी नहीं है, तो द टर्म पॉलिसी विल किक इन. समझ लो आप कल नहीं हो and you have bought a non-par guaranteed return policy. Who's going to pay the premiums? The premiums nobody will be able to pay, and the policy will probably lapse, and all the amount that you have put in, will literally get wasted. You will get some small guaranteed surrender value, not small, but I mean it won't be good enough. So my short answer is that it depends on what you already have. If you don't have either of the two products and this is the first product that you are intending to buy, my vote would go for term.
Yeah. No, I think that's a great answer, Rishabh. But my view is there is slightly different because I believe that it
Hmm.
depends on your income level. See, if your income level is very low,
Hmm.
maybe 5 lakh, 10 lakh rupees a year, then it makes sense for you to go for a bundled product, which is a guaranteed product. Because what happens is that when your income is low, the term insurance rates are very high. There this is a
Hmm.
industry where the richer you are, the cheaper rates you get. So if you're buying a 50 lakh or a
Hmm.
1 crore policy, it's actually a very good price. But if you're buying a 10 lakh rupee or a 20 lakh rupee term policy, it is very expensive. So
Hmm.
when you have lesser money, first option is that you have to save for the family. If you can't debundle investment and insurance, जैसे हम बोलते हैं ना, अगर आप अपना investment and
Hmm.
insurance को तोड़ नहीं सकते, तो आपको सबसे
Hmm.
पहले गारंटीड रिटर्न ले लो, तो उसमें आपको एटलीस्ट प्रीमियम पे 10 टाइम कवर तो मिल रहा है. और जो पर्पस के लिए
Hmm.
आप बनाना चाहते हो कि मुझे घर खरीदना है, मेरे को अपनी बेटी को एजुकेशन कराने हैं, मैंने अपने बेटे को एजुकेट करना है, या वो एटलीस्ट वो पर्पस अचीव हो जाता है. ठीक है. एंड व्हेन योर इनकम इज हायर, then it is
Hmm.
reverse for you, then because you
Hmm.
can debundle insurance and investment. तो
Hmm.
आपको you should buy a term insurance first and then get into investments and then get into guaranteed return plans. ठीक है.
Hmm.
So it depends, all depends on your income bracket according to me, and it is
Yeah.
very important that आप उस हिसाब से करिए.
Yeah.
और जो and both and between देखो, between both of them they are both very good. Like
Hmm.
guarantee, see, also have to have, I have money in my bank account, I have money in my bank FD. Today it's not yielding me anything. 4% 5% इंटरेस्ट रेट मिल रहा है, उसमें से 30% टैक्स जा रहा है. एंड दे आर सम बैंक्स दो दो 2% दे रहे हैं. एंड आई एम
Yeah.
शॉक्ड के लोगों ने 2% पे एफडी करा रखी है. व्हाट्स द यूज? टुडे take that money, put it into a guaranteed return life insurance plan, get that 5.5 6.5% type of a return, and it's a fantastic return for you. So point is that I will say that look, out of your debt portion, keep
Yeah.
this money in guaranteed return plans. Buy a term plan if you can afford it. You must have that term plan, and that's the right combination for you. So also, Rishabh, another interesting question. Priyanka Tamta is asking us that can you suggest any good ULIP related plans to the market? Now, this is again a whole question that for ULIP plans, uh, should a person choose mutual fund plus term insurance, or should you go for a ULIP, which is a bundle of a mutual fund type of a product and a term insurance? How would you which is a good ULIP plan you like, and what would you answer on this question?
So I'm obviously biased towards ULIPs, right? So you will get a little bit of a biased answer, but I'll try to be as candid and as honest as I possibly can, right? Because we are talking to consumers here, and my short and sweet answer is that between ULIPs and mutual fund, what is important is the horizon. Okay, if you are intending to stay invested for anything more than 5, 6, 7 years, okay, the answer in my mind will be ULIPs, and I'll try to explain why. If the horizon is less, than 5, 6, 7 years, and the reason I'm keeping this 5, 6, 7 years, it can, it'll vary from the return that each instrument generates. Then you should typically go for mutual funds. Now, why am I saying that policy, so first and foremost, a unit policy, if it is less than 2 lakh rupees of premium, okay, it is okay. The proceeds, the earnings will get taxed as long-term capital gains or short-term capital gains, depending on how much you want to hold it for. The second thing is that in a general policy, you have an option of switching, which effectively means that today if I'm invested in equity,
Uh, Guys, I think we have lost Rushabh, but let me put my two bits on what Rushabh was answering. See,
you can do
it
a
all
switch.
depends on your need, Priyanka. So, Priyanka, today, ULIP insurance can give you a very nice bundle of both. And if you can't afford to debundle, then go for a ULIP. But you can also look at going in for a mutual fund investments and then taking a term insurance. So both are equal. And today ULIPs have a maximum charges of 1.35%, which is equivalent to a direct plan of a mutual fund. So today, there is not, it's not that you're paying any extra, but what you have to be careful about, there are some companies with some ULIP products with very high charges. So you always look at, the ULIP instruction, the ULIP illustration is at 8%. See that what is my yield loss. Yield loss hota hai, what is the IRR you get on 8%? Suppose you're getting a 6.5% IRR, that means 1.5% is your yield loss, which is fine. But agar yield loss bahut zyada hai, so my point is that take it through a good distributor or good intermediary who can guide you, and always ask them for the yield loss. Agar yield loss theek hai, then you can go with either. But on the insurance side, what they are able to do is they are able to have a more stable portfolios and longer term calls. So sometimes you end up getting very good opportunities, and the insurance funds are delivering very good returns. So it may be a great option for you to take. Now, Rushabh, next questions are there people that what is the best
Sanjeev,
term insurance?
I'll
Yeah,
just
yeah, please.
take two. I'm not sure when I got dropped off, but I'll. So there are 2, 3 other reasons. I heard most of what you said. So the essence is that if it's a long term view, you go for ULIPs. If it's a short term view, you go for mutual funds. And I'll try to explain why ULIPs, right? So there are 2 or 3 things which immediately come to my mind, and I'm going to rattle it off because of time. So first of all, mutual funds, irrespective of the value, you will have to pay long term capital gains or short term capital gains. Okay, in case of ULIPs, if it's less than 2 lakhs, you don't pay any taxes. You obviously get a wraparound, life insurance cover. Sanjeev did mention the fact that, as an insurance company, because most of our contracts are long term, we can take a longer term view on the stocks that we pick. Also, and one thing which typically gets missed out, right, by most consumers is that the umbrella product is a unit linked product, and then you have multiple fund options. You have an equity fund, debt fund, multi cap fund, blah, blah, blah. Today, if I need to move from one mutual fund to the other, I need to actually exit a mutual fund and then reinvest. Okay, and the capital gains will actually kick in. In a unit linked plan, you can actually do a switch. Okay, and from a consumer's point of view, it's very, very beneficial. So you don't pay anything, you're still in the same umbrella product, and I can, if I feel that okay, Ukraine ka war is going to become like really really crazy, and I want to kind of move from equity to debt, I can just do that by making literally a phone call, or by actually doing some self service option on the customer portal, and instantly it gets moved. So like I said, pros and cons, but a little bit of a biased view, but I would strongly recommend Ulips.
Yeah, very well answered. Some very innovative new thoughts.
Hmm.
So I know we are slightly short of time. So
Hmm.
Sukija is asking us this question: which is the best term insurance at the age of 33? Please approach a good broker like Bajaj Capital and let them, because see, there are a lot of other permutation combination. The best depends on what you need. So if you need a coverage till 60, there's a different product. But that may be a mis-selling. But if you need a coverage till 85, 99, how long do you want to pay the premium? So there are a lot of these options that you have to look at, Sukija, to get what is the best for you. Sandeep is asking a question that is it possible to take term insurance at the age of 53? Um, any of the products that cater to people above 50? Sandeep, again answering your question very, very quickly, that yes, term insurance is available even at 53. Most of the companies today offer term insurance till the age of 60, 65. So, Rushabh, what is your maximum age at entry for your term products?
uh, 53 में definitely available है. I think it goes up to 60, but I'm not 100% sure. But 53 में तो definitely available है.
Yeah, yeah. So very few products would have a capping of 55, but
Yeah.
then there are products which are available till 60, 65 also. So, but yeah, but older you get, they are more limited option and you are paying higher premium. See, term insurance may you also have to understand that the premium depends on the age at which you enter. So if you enter at the age of 35 and you are paying 10,000 rupees, unlike health insurance, this premium does not increase. It's a fixed premium. So 10,000 will remain 10,000. But if a person enters at age of 55, then for the same sum insured, rather than 10,000, he can be paying 50,000. But he'll have to pay 50,000 for the rest of his life. So it is always better to enter a life insurance right now. I don't say at the right age, because जब जागे तभी सवेरा है. आज आज अगर आपको याद आया तो कर लो. And there's this gentleman who had asked this question that I bought my products from Bajaj Capital. I hope all of them cover act of war, act of God. See, guys, we can't change the product. Product depends on the company and when you took it. But you can definitely get this product reviewed from the Bajaj Capital team. And if some of these are older products, we will help you migrate or port to newer products, which give you a much better coverage. So we will do that for you. And then there's also an interesting question, Rishabh, that there are some companies which are giving 6.5% with 6 years PPT, and then the income for 30 years. So how do they are giving guarantees which are lasting almost 30 years. But how do they end up managing to give such long-term guarantees, and is that safe? Guys, I think we have lost Rushabh again. But let me take that question let me take that question that Madhu, your question is that how do they end up doing it? Because today you have long-term papers available, you have derivatives available. There are very strict regulations how you can manage your portfolio. And today it is possible for companies to give that coverage for the next 15, 20 years or even 30 years. So if you have that advantage of those products being available, then might as well take advantage of them. Rushabh, are you back? Can you hear us? Would you like to add anything here?
Yeah, I can hear you.
Yeah, so I think, sorry guys, we are facing some technical glitch. I will take two final questions. One is women being housemakers, how much life insurance is considered for them and how can they take? Now they are, being, homemakers, they have a limited amount of covers and it depends on company to company. So typically what I have seen, it's anything between 50 lakhs to 2 crores and sometimes even higher. So, Mr. Bhaskaran, if you are interested, please apply, because life insurance is a very underwriting based thing. It also depends on the husband, what is he doing, uh, what is the family situation, what is the education of the woman. But it can be anything between maybe 50 lakh rupees to maybe a 5 crore rupees, depending on the situation, if a person is homemaker. And one thing is that homemakers also should be covered, should be insured, because a house, if one of the spouses or goes, then the expenses go up considerably higher, because the amount of work that is being done by the other person. So it is very important to cover yourself and your spouse also, whether you're a male, female, however the combination is, you should cover that. Rushabh, we are back. Thank you.
Yeah, sorry, did I miss anything? I'm so sorry about this,
Today
guys.
the internet is crazy all over here. So
Yeah, yeah,
just there was a question on that: how much life cover is available for housemakers or women
yeah.
today? And let me say there are a lot of housemen also, which we are coming across.
Yeah. So again, like I said sometime back, right? Insurance effectively is an income replacement tool, right? For most instances. So if there is no income, there is no income to replace. So housemakers, men or women, typically will get a muted cover, depending a little bit on what their spouse already has. So typically, let's say if an earning member in the family has, let's say, 100 rupees, but the chances are that the homemaker will not get more than 50 rupees of cover. And this is, I'm talking purely from a thumb rule perspective. It can vary from case to case, but this is what it is from a thumb rule point of view.
Yeah, and thank you. I think that's a very fair question. And also, then we can just take two last questions.
Sure.
And one is something we had promised in this talk, but the other is that do you expect the premium rates to increase further, or do you expect the premium rates to be stable? And finally, what is your view on LIC IPO? A lot of people are asking that.
Uh, so on the premium rates, one thing, I say this almost jokingly with everybody who asks me this आपके लिए तो premium rate increase होने ही वाला है, because tomorrow you're going to be older than what you're today. So you might as well kind of just latch on to whatever is available today. As far as overall markets are concerned, uh, uh, it'll depend a whole lot on how the COVID situation pans out, right? Like most of us would like to believe that it is behind us. Even in the third wave, the mortality was very much in control. So I don't anticipate massive increase in rates, which is what we saw actually over the last 24 months. And even if there is going to be an increase in rates, it will be maybe late single digits, early double digits. But again, from a it's like timing the market, no? Nobody knows what is the best time, what is the right time. आपको इंश्योरेंस का जरूरत है, आप ले लो. Don't worry about whether it's 100 rupees cheaper or 100 rupees more expensive. The first thing that I said is most relevant, right? It's definitely going to be more expensive for you as an individual, because tomorrow you're going to be older than what you're today. And don't try to time the market. Don't try to time it. As far as the IPO is concerned, Sanjeev, I don't know. It's something that we are all looking forward to. It is the mother of all IPOs, and when it's a life insurance company, we are all obviously excited. Let's see what happens in terms of timing and what happens in terms of pricing, and whether anything is worth buying into or not buying into depends on only these two factors, right? Is the time right and is the price right? So it'll be very difficult for me to comment in terms of whether an investment should be made or no. All I can say is LIC is a respected organization in the industry. We all look up to LIC, and I would wish them all the very best. And I hope that they can manage to do the IPO soon enough.
Yeah, and I will just add to that that look, LIC is a fantastic company. Now, coming in from this industry, there are a lot of government companies which are not sharp, clean, state of art. LIC is not that. LIC is a very progressive, very good company. You can rate them at par with any private company in terms of aggression, in terms of efficiency. So they are a very good company, but the decision whether you should buy and subscribe to that IPO depends on the price and the valuation and the time. And that's where you have to take that decision. I know we are already over time. My apologies for the technology glitches today. Thank you, Rushabh, for taking out time. I think we were able to add value to people's life. Originally, I'd seen when we started, we had 13,000 live viewers. So that's also very exciting to see so many people had tuned in today to listen to us chit chat. Thank you, everyone. And thank you, Rushabh, for being with us.
No, thank you so much, Sanjeev and the Bajaj Capital team for having me. And I hope I could add value to the lives of the consumers. Thank you so
No, no,
much.
it was fantastic. And thank you, everyone, for joining us today. And we look forward to having you with us for our next version of FINtastic Talks.